Students, now tell me, when was the last time you heard the word bank? Maybe when your parents said, Beta, I have to go to the bank today. Or when your friend got that 500 rupees gift and said, I'll keep this money safe in my piggy bank. Well, today we are going much deeper than a piggy bank. So, quickly grab your notebook, settle in, and let's begin. Have you ever wondered where does this word bank come from? Well, here is a fun fact. The word bank comes from two old words, the French word that is bankers and the Italian word called banco, both of which actually mean a bench. Yes, literally a bench. Imagine the bench you sit in the school. And here's why in olden days, moneylenders would sit on a stone bench in coastal areas and do their money lending businesses. Now, if they made a profit, they would come back the next day and sit on the same bench. But what if they suffered a loss? They would attempt breaking the bench and would never return back. That's where the phrase going bankrupt also comes from. Breaking the bench. Isn't it fascinating? Yes, of course. In simple words, a bank is a financial institution that collects money from people who want to save it, called as deposits, and gives this money to someone who needs it in a form of loans. Now, think of it like this. Your mother keeps rupees 10,000 in the bank every month. She does not need this money right now. Well, she is saving this money for your future. The bank takes the money and gives it to a small shop owner in your locality who needs a loan to renovate his shop. The shop owner here pays back the loan with some little extra amount, which is called as interest. The bank keeps a part of that interest and gives back of it some portion to your mother. Everyone wins here. In simple words, a bank is the trusted middleman between the savers and the borrowers. It all starts in the year 1770 in Kolkata with the Bank of Hindustan, India's first bank. But it did not last long. It got shut down in the year 1832. Then came the three big ones. Bank of Bengal in the year 1806, Bank of Bombay in the year 1840, and Bank of Madras in the year 1843. All these three banks eventually got merged into the Imperial Bank of India, and then in the year 1955, this got transformed into what we call today as SBI. Yes, State Bank of India. But the real game changer happened on April 1935. And no, this is not April Fool's joke. This is when Reserve Bank of India, the RBI, was established. The RBI became the bank of all banks, the one that controls and regulates the entire banking system in our country. Before we move ahead, it is important to know that banking in India is governed by the Banking Regulation Act of 1949. This landmark legislation lays down the framework for licensing, management, supervision, and regulation of all the banks in India. It empowers the RBI to inspect banks, issue necessary directions, and ensure that banks function safely, protect the interest of depositors, and maintain the confidence in India's financial system. After India's independence, the government had a very big question. How do we make sure that banks serve every citizen of this country, not just the few rich? The answer was simple. It was nationalization. In 1969, the government nationalized 14 banks, which included Bank of Baroda, Canara Bank, Punjab National Bank, and Bank of India, among several others. Again, in 1980, 6 more were added to the list, which included Andhra Bank and Vijaya Bank also. Here, the idea was simple: bring banking to the people of this country, the farmers, the teachers, the daily wage workers, and everyone in between. And that mission continues. In 1975, regional rural banks were set up for the villages. In 1982, NABARD was created to support the farmers. Exim Bank for import and export, National Housing Bank for housing, and SIDBI for small businesses came into picture in 80s and 90s. Now let's quickly jump to 90s. In 1991, the year that changed India forever, government opened up the economy and private banks entered the scene. ICICI, HDFC, Axis, Yes Bank, IndusInd Bank, all these banks brought new technology, ATMs, internet banking, and eventually today UPI. In 2013-14, RBI introduced 2 exciting new types of banks: Payments Bank like Paytm, and small finance banks focused on smaller communities and micro borrowers. Well, for your exams and for your life, remember this: a bank is not just a building where money sits. It is the engine that keeps the economy moving forward. Well, students, that's it for the day. I'll see you back in the next series of that podcast. Thank you.